Welcome to another DeFi chain video. My name is Kügi and I want to give you information and insights so that you can make smart decisions. Today I want to talk about the special DFIPs that are currently in the voting process on DeFi chain. They are already nearly approved when it comes to the votes and everything, so I think it's fair to say that they will likely be approved and be activated beginning next week. So let's talk about what they are, what will change, and what are the likely implications of that. To get a bit of a better understanding about the implications and what that means, I want to first give you a bit of an insight into volume analysis and what volume means on our DEX. So let's dive in, and after that we talk about the DFIPs. When I analyze volume regarding the market and the price of DFI, I only look at the DEX because the DEX is the highest liquid or has the highest liquidity in all the markets that we have. And when we look at how the volume flows, how the trade volume and trade liquidity flows on a central exchange, you get an order and maybe a big order that moves the price. Then instantly, because you have a higher liquidity on the DEX, you have arbitrage traders that sell the coin there and move it to the DEX and buy it on the DEX, move it to the central exchange and sell it there to counter that, and therefore move the liquidity and move the volume over to the DEX. So you see basically all the relevant and significant volume that's traded on other exchanges that has an impact on the price. You see it reflected on the DEX. And therefore, I only look at the DEX and have a good impact or impression of what the market is doing and what's the volumes that we see. Now, when I look at the DEX, I aggregate over all the pools where DFI is traded, except for the DFI DUSD pool, so only the crypto pools where we have arbitrageable coins with other exchanges. And there I just sum up all the coins, the DFI coins that are bought and all the coins that are sold all together and make a difference. So in this coin we see, or in this chart, we see the last 30 days, and the red line is the sum of all the sold DFI over all the pools, and the green line is the sum of all the bought DUSD. And the dotted line is the delta. So that's, in my opinion, the most important metric here, because it's the difference between the overall buys and the overall sales. If this is positive, it means more coins got bought than sold. If it's negative, more got sold. And as everybody knows, if there are more buyers than sellers in volume, then it goes up. If there are more sellers, it goes down. And now we have one very interesting thing with the DEX compared to a central exchange with an order book. On the DEX, the price can only move if we have volume. Every step on the way up and down needs to be traded. With an order book on a central exchange, if there is no limit order there, if there is no one selling you coins and someone wants to buy, the price shoots up until someone is willing to sell. On the DEX, you have the automated market makers, so the liquidity providers basically always sell you coins, give you the liquidity to swap. So all changes in the price needs to have basically the same volume. So volume is a perfect indicator for the change in the price. And let's put that a bit to the test. When we look at that, here we have the good situation that Bitcoin was kind of stable over the last 30 days. There was a bit up and down, but not that much. And therefore we can look at DFI versus Bitcoin as a reference for the overall market price. Generally, overall market price is always a bit difficult if the reference has changed, because you have the stablecoin reference, stablecoins that you trade against, you have Ethereum that you trade against, you have Bitcoin that you trade against. So overall, it's a bit harder to tell, but right now, that's a good reference. And here we see during this negative deltas, we have a constant dropping of DFI price. Even here where we have a nearly zero delta, we see that the price is pretty flat. And here, when the price finally moves up and gets into the good positive delta with 10 million bought in one day, over 11 million, I think, bought in one day, we see a massive spike up in the price. Then where it's dumped again, we see a negative delta, price shot back down, or a bit down, and then up and down. And the last 3 days, we see the volume being up and the price moving up too. And from that, we now, so it looks like there is a connection. It looks pretty solid that we have something there. And now for me, it would be interesting, or what I looked next is there some kind of prediction possible? Is there some ratio where you say, okay, that's a price change per volume, so per million, for example. So I did some, example stuff, no big scientific research, no huge data set or anything. I think it's also pretty hard to have a big data set because the question is what means performance against the market. As I said, if Bitcoin moves up and DFI moves up too, there's a lot of DFI bought on against the stablecoins and everything, but it likely won't move against Bitcoin, but it moves against the rest of the market or against the stablecoins. If Bitcoin is flat and we move up, we have a movement against the whole market. If Bitcoin goes down and we are flat, there is no movement and no trading against the stablecoins, but a lot against Bitcoin. So it's always what is the market? Here we have the lucky situation that everything was a bit flat, so we can take that as a reference. But still, I think there's a pretty nice connection that we see in a minute. Because when we look at the numbers, I took those 30 days and just said, okay, let's look only on significant days, significant buy or sell days, so only days with more than 1 million in the delta. So more than 1 million delta sold or more than 1 million delta bought. And then on those days, what was the change in the Bitcoin and DFI price? And then take that, divide it, the change by the volume to have a change per million of traded coins. And if you look at it, it already gets pretty clear that we are in a certain range. We have some outliers above 2% per million. We have some outliers a bit below 1% per million, but roughly we have a good average of 1.6, 1.7%. The real average is 1.6%. So when you take the average here, you have a ratio and a connection there that each million of netto DFI volume, netto buys or netto sells, leads to around 1%, 1.6% change in the price. And that's important if we now talk about what's the implications of increased demand. And also in the future, when you think about what does this additional demand mean for the price of DFI, can keep that number in mind. That's the current number based on the last 30 days. I will keep an eye on that number and likely post that when it changes, when we see a difference in the behavior, because I think depending on the overall market structure, depending on the price of Bitcoin compared to the others, it might change that we need more coins to move the market or less coins to move the market. Depends on the supply and demand we have overall. So let's see how it moves. But right now we have this 1.6%, which is a good reference. So with this clear and defined, let's go to the special DFIPs, what they do, what is proposed, and what they mean. What is proposed? We have two special DFIPs. The first is a permanent change on the balance of the crypto rewards. Right now, the crypto rewards are balanced or distributed over Bitcoin, Ethereum, and the DFI stablecoin pools, USDD, USDC, and USD. And the change is that we focus on the big pools where we want to have a strong connection. That's Bitcoin and Ethereum. And we balance that based on the market cap, 70% to Bitcoin, 30% to Ethereum. And the other pools change to being pure real yield commission-based pools. We already see that due to the arbitrage between all the coins, those pools, those stablecoin and DFI pools already provide commission and real yield of 15% APR. So there is already a strong commission there and a strong real yield there. So this will be a really good step towards having real yield and pure commission-based stuff. And the focus on Bitcoin and Ethereum is right now where we want to strengthen the liquidity there and have the magnets there. And right now, Bitcoin is already around the 70%. So there will be likely no change in the Bitcoin pool because of this, but there will be a strong increase in the Ethereum pool. So we increase our connection to Ethereum because with the change to Meta chain, the DFI is more similar to Ethereum, so should move more closely to Ethereum. That's why connection there makes sense, and we increase the demand and utility there. And the second one is based on the 4 new pools that we have. We added 4 staking coins to the chain, staking on their native chain, not staking on DeFi chain, but Solana, Matic, and Sui, you can stake in their network. And we added that to DeFi chain, and we have the new pools, and they already traded a lot. They provide a lot of commission already, a real yield, but they are not filled that much. That's why the commission is all pretty high there right now. And we want to take this opportunity now with the funds from the buy and burn bot to increase the liquidity there, attract a lot of capital, and increase the TVL on DeFi chain, and also therefore create a lot of demand and utility in DeFi. And since we don't want to go more towards an inflation-based system, but we want to go toward real yield, this is not a general change. This is just a 120 days promotion where we say for 120 days, we increase the rewards there to get liquidity in, to have a lot of trading there, because more liquidity means more volume can get through. And then you have commission there and therefore attract the capital, and the capital will likely stay in here. And the second nice thing for that is it's a promotion for the staking coins. So not only for those 4, but also Ethereum. And with the special DFIP from 3 weeks ago, I think, whenever you bring a coin, any coin from outside onto DeFi chain, it needs to be wrapped somewhere. And Bake and Quantum Bridge does this wrapping right now. But till the special DFIP from 3 weeks ago, it's already approved and everything. Those collateral for those wrapped coins was just lying around doing nothing. And now they take 90% of that collateral and stake it natively on the chain. Bake can do that. They already have all the infrastructure for that. And they take the staking rewards from that collateral and buy DFI with it and burn the DFI. So they create constant buy pressure from the staking rewards of the collateral. And that's also something that has a pretty nice positive impact. If we create more TVL, means more collateral and more constant buy pressure from those staking rewards. And how do we do that? As written here, the rewards that went to the buy and burn bot previously is now used directly for these 4 pools. So the block rewards that come in are for those 4 pools. We start at the full amount that we get in the amount, and then linearly fade it out to 0 over the 120 days. Every 5 days a reduction, so that you don't have to change it every block or anything, but every 5 days there's a reduction. And for the Ethereum, we take the accumulated DFI that we have in the buy and burn bot addresses right now, because since it's been off for some 2 weeks, and it will be off until the DFIP is activated. There we accumulate 2.3 million DFI roughly in the addresses, and we take those 2.3 million and spread it out over the 120 days, starting big and then fading it out to 0, and use that as special custom rewards for the Ethereum. One important thing is all those custom rewards that we have, additional rewards and everything, all the functionality is already there. We did that back in the days for Doge. So that rewards the functionality that's all there. It's just a change of parameters on a chain. So the team just needs to set the parameters that the rewards go there now and the custom rewards go from that address, and the chain takes it directly. So there is no bot involved, nothing. It's just a change of parameters on the address. and that's why we can activate it right away. Basically, I think since the voting ends on a weekend and the team usually works during the week, I expect it to be activated early next week, Monday or Tuesday, to be activated, and then it will start off. Now, since we know now what's happening, the question is what's the impact of that? And there we need to look at the numbers, what rewards coming. So for each coin, I have here the total rewards per block that this pool will get after the activation. And you see the numbers here, and the liquidity, or the numbers that we have here, is the APR that we would have if the liquidity in those pools stay the same. For Ethereum, we see right now we have, I think, 10% APR in the Ethereum pool. And if the liquidity in there, we already have some liquidity in there. If the liquidity would stay the same, we would see 54% APR in the Ethereum pool. That's a lot for Ethereum, but it's still nothing compared to the other pools where we would see between 3.8 and 4.8 thousand%. A lot, astronomically high rewards, which will attract a lot of capital, because people in other communities, if they see this and say, okay, if I take my Solana to Cake, they're just wrapped, it's not nothing else, I put it into liquidity mining, I get 4,000% APR, of course I do that. If you get 400% APR, you still do it. I guess if you get 30% APR, you still do it. And that's now the big question is, because the more liquidity we get in, the lower the APRs will go. And the big question on what impact will we have from this DFIP is how low will this APR go? In my opinion, 15% is optimistic but possible scenario, because right now in the Bitcoin pool, in our biggest pool, we have 14% inflation-based APR. So the DFI rewards are 14% in the Bitcoin pool. So 15% target is possible. So say it this way, in my opinion, it's realistic, but we don't know. But based on those estimates, we can then estimate how much liquidity will come in to reach those numbers. When we talk about that, let's first talk about what liquidity or possible liquidity do we have on the chain right now. So right now we have free DFI around 85 million in tokens and UTXOs. So all the DFI laying around on exchanges, at Bake, for float, on different addresses, people using for transaction UTXOs, some lost coins, all that stuff. All those are free DFI lying around, total 85 million. Within volts, we have currently, or collateral in volts, we have currently 98 million DFI. In the liquidity mining pools, all pools on the DEX, well, we have DFI, we have 129 million DFI, and the staking, the masternodes are 382 million DFI in masternodes. So that's the liquidity that we have. Compared to that, let's look at possible demand from those pools. If we have a target APR of 15%, we would see, or we would have a demand of 162 million DFI. Keep in mind, this is not depending on the price. It's not that if the price pumps, if we get a 2x on DFI, we need less liquidity. No, because the rewards are in DFI. The demand is in DFI coins, not in dollar value, in DFI coins. If we have a target APR of 30%, it's still 70 million, and 45%, just to have the number there, 39 million. In my opinion, 45% is super unrealistic, because why should anyone in a normal crypto pool not go in there if you get 45% APR? That's, especially now in a bear market, yeah, a lot of APR, a lot of cash flow. And if Bake has, they put promotions, they have a zero fee promotion, so they have a big incentive to get liquidity in, so they would likely promote that like crazy. So I don't see anything. And I would understand with a DUSD pool, because there you have the fee and all the uncertainty and everything. There I understand if the APRs are higher, and even there with the stablecoin pools, we see only 20% APR. So it's not too high. So I don't think that it's anywhere realistic to look at that number. I think we will be somewhere between those two, likely closer to the 15%. But let's look at where would it come from and what's realistic. Free DFI is super hard to tell because you don't know how much of that is really unusable because it's a treasury of Bake, for example. It's a treasury on exchanges, just coins on exchanges and so on. So we don't know. I would say, just gut feeling, it's not more than 40 million will come out of that, because there's so much stuff flying around that will definitely not be used. So not more than 40 million will come out of it. For the vaults, it's a bit more difficult. A few days ago, I would have said 40 to 50 million, like maybe half of the coins will move. But there I expected the negative interest to go down because the buy and burn bot is off. But now we see that people get so bullish on DFI that they start selling DUSD for DFI in big amounts. And that is a lot of burn of DUSD. And therefore the negative interest goes up. We saw a spike or a jump from 31% to 37.8% or something within 1 day from the selling, from the DUSD swapping yesterday. So in my opinion, the DUSD will stay high and maybe even increase further. So there is still the big demand for DFI in the collateral, and there won't be a lot of collateral coming out of the vaults, in my opinion, because the negative interest is so high. So here I don't see more than 10 million coming out. Could be, maybe that's already high, but let's get the higher numbers, 40 million here, 10 million here. For the masternodes, they usually don't move. They don't want to move. They have the staking, they have the only DFI, no other coin, I don't care mentality. So I don't expect, I would be surprised if you see more than 10 million coming out of this either. So let's say 10 million here, 10 million here, 40 million here. DFI pools, the question is how much price neutral stuff will come out of the DFI pools. If we have price impact, that means it gets bought. That's the second category that we look at right later. If it's price neutral, it means people take the DFI out of a vault, out of a pool with the other coin out of the pool. For example, DFI BTC, they take Bitcoin and DFI out of the pool and take the DFI and put it into the other vault, into the other pool with Solana or Ethereum or something. The other pools are not interesting to take liquidity out, because if you take Ethereum liquidity out to put it into Solana with our calculations, someone else needs to put it into Ethereum. So there you won't see any difference. And the other pools are too small to really make an impact. So I don't see a lot coming. Maybe again, maybe 10 million. But honestly, I think there will be no price neutral removal of liquidity out of the pools. So if we sum that up, 40, 10, let's be generous, 10 here and 10 here, 70 million could come, big stretch, but could come in a price neutral way. That would fill out to the 30%. But as I said, I don't see the 30% being the end. And even if it's the end, that was all the high numbers. So I think there will be some, even there will be some demand for DFI that needs to be bought. I think we come far closer to this number. And then we have a big difference, because, or a big difference between the demand and the 70 million that we get from here. Because if we see 150 million, 140 million DFI demand, so not going to the 15%, but just somewhere in between, we still have 70 million DFI that needs to be bought and needs to come out of the market. So 70 million times 1.6 is a strong move, say it this way. And that's just a move from this demand. As soon as we have such a move, as soon as we get that millions in liquidity onto the chain, TVL skyrockets, the coin outperforms the overall market, everyone gets the attention, and then you have people betting on it, wanting to get in, and you increase the demand and the buy pressure, which initial buy pressure, linear connection to moving up. So I think there is huge potential for a good price increase just based on the special DFIPs that start on Monday or on Tuesday, early next week. But that's not all, because right now we have the meta chain development, right? So from what I see and from what I hear from the developers, we are getting pretty close to the release candidate. So we have a pretty good version right now. In my opinion, we likely see the meta chain launch, the full fork and launch within the next 5 weeks. As soon as meta chain launches, we will see vanilla swap there, we will see other DEXs deployed there, we see projects there that will deploy from day one because they had a lot of time testing now. They are ready and for go live. And as soon as we have a DEX and other projects that need DFI as collateral on the meta chain, we have additional demand there. Right now we have 130 million DFI in our native DEX. All those coins that we have on a native DEX are instantly, as soon as the meta chain launches, we have those coins available on vanilla swap and on the DMC. So we can create tokens and pools there. And those pools need DFI because we can mirror the native coin pools there. How much DFI will we need there? I don't know, but I think it will be double-digit millions. Because 130 million here, up there in the DEX, I don't know how much, but vanilla swap, all the pools and all the projects up there will create incentives to attract capital, to attract liquidity. And with that, they will attract liquidity, and that liquidity needs to come from somewhere. So how much will we need? 20 million, 30 million, 40 million? I don't know. But I know it needs to come from somewhere. And if it gets bought and if it increases the demand overall, because we already said how much will come from here, sure, the more the price increases, the more likely it gets that someone sells. But the question is, how much impact will we have? So that all summing up, I think we will have high double-digit million demand in DeFi, real demand, not moving stuff around, but new capital demand in DeFi in the next 2 months. How big it will be, I don't know, but I think it will be really significant. Based on that, I expect a pretty strong move on the DeFi price within the next 2 months. We already see that a lot of ways agree, a lot of people agree because they already start buying, they already start positioning themselves. So it will get interesting. I hope this cleared that up. I hope you have all the information you need to make your decision on how to play that, how to navigate that. If you want to use the pools and put your Solana onto the DeFi chain, or if you want to just bet on DFI performing well with the DMC, all up to you. No financial advice. Take everything with a grain of salt, but take the information and make the best out of it. I hope you make smart decisions. If you liked it, if it gave you value, leave a like, leave a comment. Tell me what you expect, how much demand we will get over the next 2 months, how much DFI demand will come in with all the things we will get. And then I will definitely make a video once we have the DFIP activated, once we see the demand coming in and what the effects are. And then happy coding, happy trading, and see you in the next video.